New Jersey homes aren't cheap anymore. The average single-family house now sells for about $560,000. In Essex and Hunterdon counties, prices have surged almost 15% in just 1 year. But even with soaring values, closed sales are falling. Salem County dropped nearly 8%, Cape May more than 6%. Families feel locked out. Buyers who once expected bidding wars now watch listings linger. Homes that sold in 1 week last year now sit for 3. The stakes are clear, affordability is collapsing, supply is uneven, and entire communities are caught in the middle of New Jersey's confusing real estate storm. The boom came fast. After the pandemic, demand spilled out of New York City and into New Jersey's suburbs. Families with remote jobs wanted more space. Investors wanted hard assets. And suddenly, inventory couldn't keep up. From late 2023 into 2024, prices across New Jersey jumped at rates not seen in decades. Bergen County climbed 11.5%, Monmouth 10.2%, Sussex 13.2%. Even in smaller counties, gains were relentless. In Cumberland, homes that sold for $233,000 in 2023 jumped to $258,000 just 1 year later. At the higher end, wealthier enclaves became nearly untouchable. In Deal, the typical home is now worth over $3.36 million, up more than 6% in the last year, and 104% over 5 years. Avalon crossed $2.4 million, while Alpine sits above $2.75 million. These numbers cemented New Jersey as one of the most expensive coastal markets in the country. The psychology of the boom was clear. Buyers saw friends outbid by double digits. Sellers assumed multiple offers were guaranteed. Agents told clients that waiting was a mistake. And for a while, that was true. But the fuel wasn't infinite. Mortgage rates, which hovered near record lows just a few years ago, jumped into the mid-6% range. That cut deep into purchasing power. The same family that could borrow $600,000 in 2021 suddenly qualified for much less in 2024. Yet prices didn't back down. The average buyer in New Jersey now faces a monthly bill hundreds of dollars higher than they would have paid just 2 years ago. This is the paradox. Everyone still calls it a seller's market, yet homes are staying on the market longer. Inventory has ticked upward, giving buyers more to see. But every new listing seems to reset expectations, and bidding wars haven't disappeared. In Tenafly, a single home drew 19 offers before one family won out. Even with this intensity, seasoned professionals warn, the market isn't crashing, it's correcting. Prices are stabilizing at a higher plateau, and sellers no longer hold all the cards. A house that's clean, updated, and priced right still moves quickly. But the days of reckless escalation, buyers waiving inspections, bidding $50,000 over asking, those days are fading. The boom that lifted New Jersey real estate is still visible in the numbers. But underneath, the stress is building. A market that looked invincible in 2021 now shows cracks, not collapse. And that sets the stage for the squeeze buyers and sellers are about to face. Who's actually driving demand in New Jersey right now? The answer depends on price point. At the entry level, first-time buyers are struggling the most. Mortgage rates in the 6% range cut their budgets sharply, and yet entry-level homes, whatever entry means in each county, are showing the biggest price jumps. That contradiction keeps them locked in bidding wars. Meanwhile, investors and cash buyers are still in the mix. In Tenafly, one home pulled in 19 offers before closing, with several all cash. This isn't unique. Even as some buyers retreat, those with liquidity or outside capital continue to chase suburban inventory. Commuter counties tell the story clearly. In Hudson, prices rose 10.3% to $579,000 in 2024. Union climbed 11.6% to $625,000. Both sit at the front door of New York City, markets where higher-income households can still stretch, while middle-class families simply can't. Across the state, luxury demand hasn't slowed. The top tier of towns reads like a millionaire's map. Short Hills now averages nearly $1.9 million. Rumson more than $1.8 million. Mantaloking about the same. These buyers, often with cash or significant equity, aren't sensitive to rates. They push values up even as broader sales cool. That leaves the middle, traditional families looking for 3 or 4 bedroom homes with a yard. In counties like Morris, values jumped from $650,000 to over $717,000 in a single year. Closed sales ticked up slightly, but affordability stress lingers. It's this group, the backbone of the housing market, that increasingly hesitates. Nationally, the imbalance is just as sharp. In May, there were 34% more sellers than buyers nationwide, the widest gap since Redfin began tracking in 2013. But in Newark, Northern Jersey, and suburban Philadelphia, the tilt still favors sellers. Limited inventory meets pent-up demand, creating pockets where competition feels as brutal as ever. So demand in New Jersey isn't one story, it's three. The top end thrives on cash. The middle hesitates under higher rates. And the bottom, first-time buyers, fights to get a single offer accepted. Together, this mix creates the uneven, unpredictable market that now defines the Garden State. The new affordability crisis in New Jersey isn't just about prices or rates, it's about hidden costs. Insurance has quietly become the second mortgage. In Cape May, premiums are spiking as storm and flood risks rise. Even with median values climbing to nearly $583,000, sales slipped more than 6%. Ocean County tells a similar story. $580,000 median, up 8.4%, but fewer closings. Buyers discover at the last minute that premiums can add thousands per year, killing deals outright. Luxury coastal markets show the fragility. Stone Harbor, Bay Head, and Avalon still boast million-plus averages, but each saw short-term price declines as insurance costs reset demand. Inland counties aren't immune either. Sussex, far from the shore, posted a 13% price gain while sales slipped, a sign that fire and flood map risks now reach deep into the state. Realtors describe insurance as the silent affordability killer. It doesn't grab headlines like mortgage rates, but it erodes purchasing power just as effectively. This pressure feeds a liquidity crunch. Homes are staying on the market longer, and buyers walk away more often after seeing revised insurance quotes or lender recalculations. In many counties, closed sales are down even as prices tick upward, the paradox of today's market. A handful of areas like Monmouth and Morris still show price and sales gains, but these are exceptions. Statewide, the flow of deals is thinner and slower. Confidence, once the fuel of New Jersey's boom, now wavers. A single updated FEMA flood map can double premiums overnight and void pending contracts. Realtors recount families losing financing mid-closing because insurers pulled out. Even trophy towns now show cracks. Avalon slipped nearly 4%, Stone Harbor 6%, Bay Head almost 6%. The 5-year trend remains impressive, but the short-term trajectory hints at fragility. Policy adds another layer. Local zoning disputes slow construction where it's needed most, while flood zone restrictions and risk-based insurance pricing chill coastal demand. State assistance programs exist, but inflated prices mean few households qualify. Meanwhile, stricter lender overlays, especially in high-risk ZIP codes, can block otherwise eligible buyers. The result is a patchwork market. Mercer deals still closing, Cape May deals stalling, Essex surging, Salem thinning. The ladder of New Jersey real estate is uneven. Coastal towns face the weight of climate and insurance. Commuter belts still draw demand spilling out of New York. Smaller counties rise in price but thin in volume. At the very top, enclaves like Deal and Alpine absorb volatility with cash. At the bottom, working-class counties see homes creep just out of reach. The outlook for 2025 is a market defined not by collapse but by complexity. Buyers face a full cost stack, purchase price, mid-6% mortgages, some of the nation's highest property taxes, and escalating insurance premiums. Sellers still find buyers, but only when pricing aligns with the new math. For families, the decision is no longer about timing the market, but about surviving the layers of cost that define homeownership in the Garden State today.